All right, guys, how you doing? The market just opened up and we are about 15 minutes in. We have two very interesting areas where price is currently rejecting from. This area down here, but also this area up here. We have a clear D volume profile, as you can see here on the right-hand side. I'm going to draw this out beautiful for you guys here. A very nice D volume profile. So it's a balanced day so far. Clear rejections off of these lows, clear rejections off of these highs. So right now you have an advantage going long here and you have an advantage going short here. If you take a look at the volume profile, you can see we have some absorption down here, but also some absorption up here. Overall, there is some liquidity at the 60s, 860s, so which is obviously here, right where we have our level of interest. So we might see that this liquidity will get swept very, very soon. And if that happens, obviously, we do want to see a couple other things in the order flow, and then we have a potential short entry. Otherwise, for now, it's just a waiting game, seeing that the market will actually go into our levels of interest. And if that happens, obviously, we are in. I'm going to delete these beautiful drawings here for you guys. And then let's just wait for now. By the way, guys, I'm going to make a YouTube video most likely about this trade down here, because this was right here was a reversal trade that it couldn't have been more obvious. Okay, this right here was a picture perfect reversal trade. It was at, what was it? I think 9 a.m. Yeah, 9 a.m. So you can see it right here. 9 a.m. This right here, this move was about as predictable as it gets in terms of a reversal. So I'm going to make a video for you guys about the anatomy of a reversal trade, so you can catch these trades very soon as well. But for now, obviously, let's wait and see what the market gives us in these ranges here. So where the market is just going a little bit like back and forth, it's not really decisive. You just want to stay away from the markets. You want to wait and see what the market gives you at your levels of interest, obviously. In these high volume areas here, anything can happen, guys. So this is as clear as it gets in terms of a balanced day when we look at the volume profile. We're also, as you can see here, in yesterday's range. So this is really as clear as it gets. We have yesterday's volume point of control down here, which acts as a pretty good resistance right now, also as a level of liquidity. We then have these highs up here where there will be a bunch of liquidity as well, but also these high volume nodes, obviously. And this is where the market is currently rejecting from, this high volume node down here, up here, and then obviously this low volume node down here. Now, in case we might break below these this low right here, we could potentially go to the 77s, 80s, to this high volume node. To this volume node here on the left hand side. Okay, guys, and we are currently very close to at our level of interest. So let's take a look and see what happens. Some good absorption, liquidity up here is definitely there. Now you do want to see a couple of things. This is one of them that you'd like to see the market do. Beautiful. Let's zoom in a little bit. Okay, and then we might be able to get in our trade very quickly. On the 16th. So far, I'm not in yet, but I might want to get active very soon. We are at a level of interest. Liquidity is gone. I'm going in. 4 contracts right now. Stop below the 800s, most likely 98s. So 98s right there. That's our stop loss, and potential profit should be somewhere here at the 34s. So 34s, I might move it down to the 32s because there's some liquidity. The market might want to go there. And now we are in. We have this beautiful level of absorption here that held. Some exhaustion here as well. No real interest in trading down here right now. So for now, we do need to see that some aggressive buying is coming in, which we don't have that much. This is worrying me a little bit, to be fair. This should be more aggressive to the upside. We have very low liquidity to the upside right now, so this trade is okay. However, it's not the most ideal trade right now. Just so you guys know, fully transparent. We see that this liquidity here is moving away once the market gets close. So this is clear spoofing, that is beautiful for our trade idea. However, overall, we do need to see some more buying coming in. If we don't see buying coming in very soon, then you should stay away from trades like these. We can check out what the ES is doing. In the ES, we have this liquidity here as well. We went down below. We didn't have a huge absorption here. This was more a standard move. Compare this move here to this move, then this is obviously way worse in terms of auction quality than this move right here. This is actually a pretty solid move. If we combine this now with what we're seeing here, no real buying activity yet, so I might have gone in a bit too early into this trade. So for now, I'm still up a little bit, but this might change very soon. I'm thinking about canceling this trade. Okay, this liquidity is being swept right now all the way down here. My stop is right below this level to be protected. Obviously, this is a pretty long-term liquidity here compared to these two. So the market can definitely bounce away from this level. That's why I actually place my stop loss below this level, not below these two levels of liquidity. We didn't even trade into this level because liquidity, it was just basically nice level spoofing. Now we do see some, no, not too much yet. We don't see too much buying coming in yet. So this is not what you'd like to see. And I do gotta be very cautious now, very careful, because the market might go a little bit below this. And then we're out of our position very quickly. So 800 is the low of the day. You see some bad auction quality here, which is good. So the market will definitely bounce away at least a little bit from this area. We don't see any aggressive buying coming in. So definitely sellers are still in control. We see that this liquidity is gone now, which is good. However, we do need to see buyers coming in. Otherwise, right now, my idea is not valid, guys. First buyers coming in again. Good. This is what you'd like to see. That is what you need to see. Aggressive buying coming in, guys. That is what you'd like to see. Okay. This is now beautiful. So first level of resistance is here at the 20s. Once we get there, I'm going to move my stop loss to break even. 20s right there, guys. Stop loss is now at break even. Second level of interest is here at the 30s. And for now, because we're moving up quite aggressively, I will trail this. I should put this below the 14s, just so you guys know, because right here, the market might go back to this level below this very quick low right here. That is where I do need to place my stop Right now, the market is just about to hopefully explode to the upside. There we go. Some further buying coming in. Some further buying coming in. Beautiful. And I'm going to secure $1,000 in profits now. And we're out. $1,700 in profits. Obviously, the best entry would have been here. However, I went in here already. Once I saw some buying coming in, that was a bit too early, to be fair. Your entry should have been somewhere, obviously, here. This would have been the most ideal entry at the 800s, where there was a long-term liquidity laying around. And then we saw a clear rejection off of this level, clear buying coming in. We can see this, obviously, guys. If you compare these two levels, here I saw some buying coming in, and I expect the market to just move away from this level right away. I placed my stop loss below this level because I knew the market could potentially go there. We went there with bad auction quality, then some buying coming in. The market went up quickly, which is obviously a very good sign. And this right here at the 14s would have been your last potential entry. So this right here would have been your entry signal for sure. But if you take a look at it a little bit closer, you can already see the comparison. Look, there's no real buying coming in at the level where I entered, okay? Right here, this is where I entered because I saw some buying coming in. It wasn't substantial. It wasn't enough because the buying actually went away. Here we had this very slow move. So, but more selling coming in than buying, which is not what you'd like to see, which is exactly what I showed you guys. Then we saw this level of absorption here, some further level of absorption. The market went here. The market exhausted a little bit, which is beautiful. And then some buying came in, and the buying was rewarded very quickly. And this is what you'd like to see. You want to see that the buying that's coming in at your levels of interest is being rewarded, okay? So if we see a lot of buying coming in, for example here, but the buying is not rewarded, meaning the price is not going up, that is not a good thing. You do need to see that your buying is being rewarded exceptionally well. And this was right here. So you could have gone in once you saw this move, or at the break of these highs here at the 18s, where you could have also gone in, and then you would have been here in here at the 18s. So somewhere up here, which looks quite high. However, look how far the market went up. That's 80 ticks, all right, guys? So 80 ticks is where the market could have taken you. And now we actually went back to this level, and this was another picture perfect entry. We just missed this, obviously, but look what happens now. Now the market can explode. But this is beautiful. The market went here with extremely bad auction quality, guys. Look at this. Extremely bad auction quality. This is about as bad as it gets, okay? So look, just selling coming in. One-way auction. This is not good in terms of a breakout trade. You do not want to see this when it comes to breakout trades. When it comes to breakout trades, you want to see things like this. Buying and selling, buying and selling, buying and selling. The market having a good auction quality. You don't want to see a bad auction quality, which is this right here. So when you see this, you can obviously get in a second time, and then you got rewarded extremely quickly. You see all of this buying coming in, and the market's just moving up, okay? The market is moving up aggressively. Now, where would you go out in this case now? To be fair, first level of rejection is somewhere here at the 18th, so you get in somewhere most likely here at the 10th, because this move is very fast. You cannot predict this. But then you see, for example, here, the market moves up, we make a low, and then once you break this high right here, boop, you're in at the 10s, and then somewhere here at the probably here at the 20s. Liquidity, yeah, at the 20s. So 40 ticks would have been your first take profit. And if we zoom out a bit further, then obviously 20s, yeah, perfect level right here. Then the next level would have been the 30s, where there was previous liquidity, and also where the market rejected from earlier. So where my move came in. And now we see this, the market is just moving below this level right now. We swept all of this liquidity. Still extremely bad auction quality, but should you get in now? Should you? Just because you see this move right now? Not really, because the market is extremely quick, extremely fast, okay? And you do not want to see this fast price action. Look how fast price changes. It jumps up and down, up and down, up and down. You don't want to see this for a reversal trade. What you do want to see for a reversal trade is slow market action. You want to see the market exhaust if possible. Now, could you have done this and traded this? Potentially, yes, because from the 89s to the 05s is still a 60 tick move, right guys? And even this right here, the move down, extremely bad auction quality. However, this is risky. Sure, you can trade this range right now. So get in here and get out somewhere in the middle of this range. Yes, you can do that. However, look how fast the market is moving right now. And then also look at this liquidity down here. The liquidity is moving lower. This one went higher, sure, but look at this level of liquidity. Boop, went lower. So this is pretty bearish price action right now. That is why you got to be careful sometimes. Now, usually, which is obviously beautiful, if you take a look at the volume profile for the entire day right now is obviously still a D volume profile, right? So overall, you still have an advantage to the upside. The only thing that's worrying me is these wicks right here. You see all these wicks to the upside. This is a clear indication of rejection. And we don't have these wicks on the downside. We just don't. Meaning the market is right now not liking these prices above here. And if you take a look at the volume profile, in case the market breaks down a bit further, where can we go to? Well, guys, I told you this. We will most likely go somewhere here to the 77s. And we can see what is going on at the 77s. So somewhere here at the 80s. Ah, interesting, right? Exactly where I predicted the market will go to. What happens here? Guys, the market rejects from this level. 77s, 80s. Look at this. Beautiful, beautiful, beautiful. And since overall we still have a D volume profile, this right here could have been a nice reversal trade. Would I have waited a bit more? Potentially, but we also have this high volume node here. So at the 80s, for sure, there is a level of interest. So somewhere here at this level. Right now, I'll be careful, to be completely fair, because we just made a new low. And right now we are accumulating, okay? We are accumulating. We are absorbing. You see all this buying coming in, yet the buying is not being rewarded, right? Because usually the buying needs to be rewarded. But look at all of this buying. Yet the price doesn't really move a lot higher, right? It doesn't. It doesn't. So, downtrend, buying is not being rewarded. We did all of this buying very close to the level of interest at the 800s. So right here, 800s. Look at this. Now the market is moving back. Okay. You couldn't have predicted this, but look at this auction quality. Is this good auction quality for you guys? I don't think so. I don't think so. Overall, your potential entry could be somewhere when we go back into this high volume area. But for now, I would keep my hands away from it as much as I can. So this area obviously is not valid anymore because we broke through it pretty aggressively. And in case you do want to trade because you might be tight on schedule and you do need to place some trades whenever you have time, then let's take a look at what's happening right now, just right now. Okay. So the market broke below these lows right here. This was the previous level of interest, 800s. Okay. We broke below these levels. This right here was a level of absorption. Okay. We are now in a range. So if we take a look at the current range, just scalping range. Okay. We see this high right here and we see the low right here. Okay. This is the current range that we are in. Overall, we see a lot of liquidity down here and some liquidity up here, but not that much. Compare this level of liquidity to this. Very, very different, right? Very different. This makes it even clearer. Look at this, guys. So much liquidity here and very little down here. Very little. Now, what you need to make sure is if the market goes to levels of previous interest, that is where you want to look for what is happening. So overall, we still have this volume profile here. We are accumulating some volume right now at the downside. So the market could technically go to this level where there is most likely some liquidity. 77s, somewhere here, 69s. Look where all of this liquidity is. So right now, you gotta be a bit cautious. To give you my honest opinion, I would either stay away from this right now completely, because your advantage right now is not clear. Your nearest advantage is obviously up here. This is where the market is picture perfect for you once more, because low volume area, overall we see a D volume profile forming. The market rejected from this low right now quite well. We absorbed quite a few contracts down here, meaning someone built up a position down here. And if we take a look at the overall position size that someone could have built up at this level, look at this. He could have built his position here, here, and some more right there. So usually what happens when this kind of price action forms and this order flow is visible, that the market now, once it goes back into this previous range and it started somewhere down here, it can shoot all the way through to this level. Okay, doesn't always happen, but it likes to do that. Okay, so right now you should just stay away from whatever is going on. Okay, just stay away. We obviously have some levels of resistance here, but this is super unclear right now. So all you need to do is literally lean back and wait. Just wait. Okay, restructure, see what is going on. And in my honest opinion, you could look for some longs down here once more, because like I said, D volume profile, meaning it's balanced. We are rejecting off of this low. We are rejecting off of this high right now, or still. So this is pretty good. And even if you only take a look at the market and price action of the New York Open, this is a high, this is the low. And that means anything, and I can just give you guys a rectangle here. There it is. So this is the high and this is the low. So look in the middle right now. So anything above this middle level here is premium, meaning it's expensive. Anything below is cheap. It's a discount, right? So what do? D volume profile, it's a balanced day. You look for shorts up here and longs. Yeah, shorts up here, longs down here. So as long as the market does what you want it to do, you can look for potential entries. Now you will have the most successful trades and the highest chance of success and win rate at levels of extreme volume profile areas. So right here and somewhere down here. So I know this is super ugly right now, but this is where things just become interesting for you guys. Okay, overall, this is where things become very interesting. What you might see, guys, is either, and everything is fine, the market you just read the market correctly. So we either reject from this, so we shoot up and we go down right away, or what also can happen is the market goes above this level. Maybe it absorbs here because we do have some level of liquidity up here. So there's quite a few contracts that can be traded, meaning the market participant who bought all of these contracts down here, he can offload all of his contracts down here, up here. And if in case this happens, the market might just trade a little bit here and then goes back into this range and then trade all the way through once more. So these would be your ideal scenarios right now. I'm going to delete all of my beautiful drawings and I'm going to watch some more price action with you guys just so you know exactly what is going on. Obviously now, with what I just told you guys, we are now at a level of premium, right? Does it mean that you need to look for trades? Not necessarily. You can if you're a scalper, if you want to just go for very quick moves, because look at this, guys. Beautiful move, but we do definitely have some level of interest here at the 60s, which I think is also my level of interest. Yeah, 60s, and then some more at the 84s. Let's check. Surprise, surprise. Look at all these levels. So the market definitely wants to go somewhere here in this area. But for now, we just got to see what happens. This obviously is a very strong price action. It's a one-way auction. Usually you don't want to go against it. except if you see very, very clear signs of an absorption, for example, meaning a very bearish signal, then you can do that. However, you do need to be super, super careful because anything can happen. I do need to end my session here in about 18 minutes max. So I'm going to stick with you guys for just another second, see what the market gives us. But overall, I'm pretty happy. $1,700 in just one account. And I have multiple, so very nice trade. Some months, monthly salary in about one trade. And this was super, super predictable. Obviously, I think this is actually the all-time high right here. So we have some crazy level of liquidity most likely laying up here. But for now, all that we care about is the market going either to this level or to this level. And once we go there, like I said, 60s guys, then we want to see what happens. Let's check the ES. The ES might already reject from this level now. Let me double check this. Look at this. Bad auction quality, absorption, exhaustion. So now the market wants to go below this level here. We can break down actually. So this can become interesting here for you guys in terms of the NASDAQ. So obviously, like I just mentioned, we are at a level of a premium. So just intraday right now, you see here, anything above this line is a premium. So we clearly are at a level of premium. And if you just want to scalp like 30 or 40 ticks, look at this. We are breaking down right now below this level. We had this level of liquidity. We went there with bad auction quality. We absorbed quite a few contracts, right? Look at this. That is 675 contracts and another 603 contracts, guys. And then we saw selling coming in, and selling got rewarded quite quickly. Compare this. The move from here to there is quite aggressive. So selling got rewarded quite a bit. And compare this to this bubble right here. These bubbles are pretty much the same size, yet we didn't go any further with the buying coming in, yet we did go a whole lot further down with this selling coming in. So this is a bearish signal, okay guys? And then once we break below this recent low, for example here, then you can look for short entries and hope for a potential breakdown or break of this further low, obviously. So that is what you can look out for. Very simple scalping trade right now in the ES. And you can obviously scalp this pretty much the same in the NASDAQ. So if you see something happening in the ES, then you can do the same. And this would have been the trade right now. Boop, there you go. You're welcome, guys. This would have been a very nice trade. I think when I mentioned this, the price was somewhere here at the 45s. And now we are at the 27th, so 80 ticks. Beautiful. Beautiful, beautiful, beautiful. Yeah, and I think I'll call it a day. I'm very happy. I explained quite a few things for you guys. So I do believe that this was of a lot of value for you. This is obviously where you should exit. Why? Guys, this is exactly where the market goes from a premium to a discount. It's the middle of this range. Do you have an advantage here at this level down here? If you went short here at the level of premium, and this is fair, and then this is a discount, where do you believe should you exit your trades? Well, most likely at this level, at the 20s. And let's take a look at the 20s. What is at the 20s? We went there with extremely bad auction quality, right? Look at this. Previous level of liquidity. Guys, these things are not a coincidence. It's not a coincidence. We went in here somewhere at the 45s, right? When I told you guys, once we break this low right here, once we break this low, you can get in short, okay? And guys, it's not a coincidence that we turn around at previous levels of liquidity. Here, 20s. That is where I told you guys, or that's what happened, where you are now at a fair price and the market is now not moving up or down any further. Guys, trading can be very simple. Trading doesn't have to be complicated ononce you understand what you need to look out for. here, level of premium price level, we saw in the ES, and the Nasdaq and the ES are correlating markets, that we went to a previous level of liquidity at a premium price level with bad auction quality, okay, bad auction quality. Then we saw a big player building up a huge position, 1,000 contracts roughly, 1,000 contracts. He was not getting rewarded for all of his buying. Yet when selling came in, the selling was rewarded right away. And once you break below these lows right here, you get in, okay? And you either get in the ES, it doesn't matter, here at the 1150s, or you get in the Nasdaq, here at the 45s somewhere. And voila, there you have two very nice trades. One down here, which we took all together, and one here, which I didn't take in that moment, but it ended up being a very, very nice trade. And just like that, that was 10:05, and now it is 10:20, 10:15 roughly. So 20, 30 minutes of trading, and you're done for the day, guys. Very, very nice. So I hope you like this. If you have any questions, let me know in the comments down below, and I'll see you guys in tomorrow's video. Bye-bye.